One of the world's leading investors is shorting stocks. He says he's not too optimistic about the future of our economy in 2012, and the only way to make money in the long run is to invest in commodities. Joining us from Shanghai on the Fast Line is Jim Rogers, the CEO and chairman of Rogers Holdings, and also the author of the book, A Gift to My Children. Jim, it is a pleasure to have you on Fast Money.
I am delighted to be here, Melissa.
What commodities specifically are you the most optimistic about going into 2012?
Well, Melissa, I'm not sure I'm optimistic about 2012 at all, and I'm certainly not optimistic about 2013. But if I were buying anything, it would certainly be agricultural commodities going forward. We have huge shortages developing of everything, including shortages of farmers. So agriculture is going to be a great place for the next 10, 20 years.
And when we say that you're shorting stocks, what kinds of stocks, what parts of the world specifically?
Well, I'm short emerging markets. I'm short American technology. I'm short European stocks. I don't see much reason to own stocks, Melissa, when one can own commodities. If the world gets better, I'm going to make a lot of money in commodities because of the shortages. If the world doesn't get better, there's shortages in commodities, but then governments will print money. And whenever governments have printed money, the way to protect yourself is to own real assets.
Hey, Jim, Brian Kelly, you're in Shanghai, and the big question here is China hard or soft landing. Where do you come down on that?
Well, some parts of the Chinese economy have a very hard landing. The Chinese government has been trying to kill a real estate boom for 2.5 years. They've raised interest rates 6 times, raised reserve requirements 12 times. They're going to pop the real estate bubble, and they're doing it. But that's not the whole Chinese economy. There are many parts of the Chinese economy which will boom no matter what happens to real estate in Shanghai and Beijing.
Hey, Jim, quick question. You talked about the ags themselves, but as far as the equity markets, something like the fertilizer stocks, they've been beaten absolutely lower and lower and lower with every single trading session. Is there any promise in the future as far as potash, Mosaic, any of those particular names?
Well, I'm not familiar enough to give you a good comment. I just remember in the 70s, stocks went down and did nothing, or economies did nothing, and yet commodities themselves went through the roof. Some commodity stocks, of course, did well in the 70s, but Yale did a study recently showing you would have made 300% more investing in commodities themselves rather than commodity stocks, unless you were a very good stock picker. So I'm sticking with the real commodities.
Hey, Jim, it's Steve Weiss. Thanks.